Hello everyone. Today we'll start with another very nice and interesting chapter of MPC 020 of Business Ethics and CSR, that is Unit 10. We'll discuss about CSR legislations and policy guidelines. In our previous class, we discussed how CSR has been accepted by the corporates as a strategy of business practices. And now every organization is adopting these CSR practices in order to make its business sustainable. In this chapter, we'll discuss what are basically CSR regulations, laws, how this evolution of CSR law came into inception in India. We'll also discuss about the applicability of CSR provisions and the activities that is listed out under Schedule 7. We'll discuss about the constitution of CSR committees. We'll be also discussing about CSR policy. We'll discuss the quantum of CSR spending and transfer of unspent amount of CSR. In this unit, we'll also cover the implementation and monitoring of CSR activities. We'll discuss on the duties and responsibilities of CSR committee and the board. There are other salient features of CSR. We'll discuss after the last amendments. We'll discuss about the CSR and corporate governance vis-a-vis ESG. And we'll also discuss about CSR audit. Let us first understand what basically is this law, where from this has came into inception. So CSR in India has basically evolved from being a voluntary philanthropic activity to a structured statutory obligation under the Companies Act 2013. How the CSR has now come into inception, how it is being accepted by all the companies. Now it is the series of stages or series of phases that we'll discuss. First one is the pre-mandatory CSR. Initially, CSR was not primarily practiced in organizations with welfare measures for the society. It is considered as the government's responsibility under the direct principles of the state policy in the Indian Constitution. Subsequently, the Companies Bill to 2008 and 2009 came into inception, where it was found that CSR was not part of the original draft bill introduced in Lok Sabha, and the idea of mandatory CSR disclosure only began emerging in discussions around the Companies Bill 2009. Then came Ministry of Corporate Affairs Voluntary Guidelines 2009. In this Ministry of Corporate Affairs (MCA), it issued voluntary guidelines in 2009, wherein it encouraged the corporates to formulate the CSR policies and develop strategies for social responsibility activities. In it, again, after 2009, in 2011, there was statutory introduction in 2011, wherein the Standing Committee on Finance recommended making CSR mandatory, leading to its inclusion in the Companies Amendment Bill 2011, and this ultimately culminated in the clause 135 of the Companies Act 2013, making CSR a legal obligation for certain companies. That there are different important key features that was included under Companies Act 2013. Its applicability is CSR is applied to companies with a net worth of rupees 500 crore or more, a turnover of 1000 crore or more, or a net profit of 500 crore or more. So a company which is having a net worth of rupees 500 crore or more, a company having a turnover of rupees 1000 crore or more, or a company having a net profit of rupees 5 crore or more is liable to undertake its CSR activities. So a committee was being formed, which was called as the CSR committee. So the companies meeting the criteria must form a CSR committee in order to formulate the policies and oversee the activities related to CSR. Now, how the spending was being done? The companies are mandated to spend at least 2% of the average net profit. Please, again, I am repeating. When the companies are mandated to spend at least 2% of their average net profit from the previous 3 years on CSR activities, or provide reasons for not doing so. That means it is mandated that every company has to incorporate CSR activities in its practices. Now, what is CSR in India? CSR is seen not just as an ethical or a moral duty, but it is now a necessity for the society. So it has become an integral part of corporate governance, with the companies contributing to social, environment, and economical well-being of the nation in various measurable ways. So the transformation from the voluntary to the statutory CSR reflects India's approach to corporate accountability and its role in sustainable development. So now we see CSR is not only a responsibility now the company has to take the accountability of spending money on CSR ground, and such that the company becomes sustainable and it contributes towards the sustainable development. So coming to the evolution of CSR law in India, the CSR under Section 135 of the Companies Act 2013 will discuss. First is we'll discuss the introduction of Section 135, that is effective from 1st April 2014. It applies to the companies meeting certain financial thresholds, having a net worth of rupees 500 crore, or a turnover of rupees 1000 crore, or a net profit of rupees 5 crore. So a committee was being formed, which is called as the CSR committee, which is required to oversee the CSR activities in the companies. Now, the spending that was done by the CSR, it was found that that at least 2% of the average net profit of the previous 3 years are being done. Next is the Schedule 7. The Schedule 7, it again highlights the CSR activities. So Schedule 7 provides a detailed list of activities that the companies can undertake under CSR. Now, Ministry of Corporate Affairs role in CSR evolution. What is its role? First is there was an establishment of the CSR cell in May 2014. What was his responsibility? The responsibility was to propose the amendments to the CSR rules. Only talking about CSR rules is not going to solve our purpose. We have to propose the amendments for the CSR rules. We have to provide clarification and coordinate with the administrative ministries and monitor the CSR expenditure and the compliance associated with CSR. There was high level committees and reports. The high level committee in the year 2015 was being formed. It was the first committee to monitor the CSR implementation, and it submitted its report in September 2015. The high level committee, second committee, was under the chairmanship of the secretary, Ministry of Corporate Affairs, and the report was submitted on 7th August 2019. Next is the National CSR Award was being framed, and data portal was being framed. So the National CSR Award was introduced to recognize the different CSR initiatives by the companies, and it encouraged more public good projects. Next came the National CSR Data Portal. It launched to ensure transparency and accurate disclosure of CSR activities. So there was continuous monitoring by the MCA. The monitoring compliance through reports from the company's board of directors was being done. Initiating actions where necessary through the registrar of companies was being done. Registrar of companies is the ROC. Next, expert committee and subcommittees were framed in July 2018, wherein the internal expert committee revisited Schedule 7 and CSR guidelines. So, two subcommittees were framed. One is the legal subcommittee, second one is the technical subcommittee. And again in January 2021, amendments to CSR provisions were being framed, where it put forward simplified compliance measures, and it also helped improve the transparency related to the activities and the disclosure of the requirements relating to CSR. So, the steps taken by the Ministry of Corporate Affairs since 2014 have strengthened the framework of CSR. It also ensures that CSR is not only a statutory obligation, but also it is contributing effectively to social, environment, and economic well-being in India. So CSR is being accepted now as a statutory obligation for various companies who are earning profit. Now coming to the applicability of CSR provisions and the activities that are listed out in Schedule 7. So when we are talking about the applicability of CSR provisions, we'll discuss about it in section 135, wherein a company is required to comply with the provisions of the CSR if it satisfies any of the three options provided down. That is, any of the three provisions during the immediately preceding financial year. What are the three conditions? Either the company would have a net worth of rupees 500 crore or more, either the company's turnover is rupees 1000 crore or more, either the net profit of the company is rupees 5 crore. So there are different important key provisions, CSR provisions, wherein the company must at least spend 2% of the average net profit of which year? Of the last 3 years on CSR activity. So it is mandated on the company that at least 2% of the average net profit of the last 3 months need to be spent on CSR activity. And then a committee was being formed, which is called as the CSR committee, to oversee the CSR policies. So CSR activities must be included in the company's board report. It is mandated, it has to be incorporated. And how it has to be incorporated? It has to be incorporated officially in the board's report. Now, there are different important CSR activities under Schedule 7. The first and very important CSR activity is eradicating hunger from the society, poverty, and malnutrition, thus promoting healthcare and sanitation to the people. Second important activity is promoting education and vocational skills for the children, women, the elderly, and the differently abled. Third important activity is equality, gender equality, empowerment of empowerment of women, and setting up homes for women, orphans, and senior citizens. Next is the environment sustainability, that is protection of flora and fauna and contributing to the Clean Ganga Fund. There are different important activity. Number 5, CSR activity, that is the national heritage and culture preservation. So you need to set up public libraries such that national heritage and culture preservation can be done. Next important CSR activity is support to the armed forces veterans and central armed police forces. Seventh is promoting sports, including rural sports, Paralympics, and Olympic sports. Next important CSR activity under Schedule 7 is contribution to the National Relief Fund. Like say we have the Prime Minister's Cares Fund. Next important activity relating to the CSR is the R&D contribution to the incubators and public funded research bodies. Next is we have the rural development and slum area development. And last very important activity, CSR activity under Schedule 7 is the disaster management that included relief, rehabilitation and reconstruction activities. So these are some of the important CSR activities that are being laid down in Schedule 7, and the companies that are acting need to take into consideration these activities into their system such that they can contribute towards the development of the society. So first important point is the eradicating hunger, second is promoting education, third is gender equality, fourth is environmental sustainability, fifth is national heritage and culture preservation, sixth is support to armed forces veterans, seventh is promoting sports, eighth is contribution to national relief fund, ninth is R&D contribution, 10th is rural development, and 11th is disaster management. Now, there are different important CSR rules which has been put forward in 2021 amendment. The key changes that are being introduced in the company's CSR policy amendment rule 2021, it identified that CSR includes the activities that is being undertaken under a statutory obligation, but it excludes the activities in the normal course of business. For example, there were exceptions for the COVID-19 research for certain years. In it, it also included contribution to the political parties. It also included activities that is benefiting the company employees. It also included sponsored activities with marketing benefits. And it also included activities outside India except sports training. Now, under this particular amendment, there were activities fulfilling statutory obligations. What are these? What are these activities? Now, this COVID-19 research exemption was there, where companies can undertake R&D related to new drugs, vaccines, and medical devices for COVID-19 during the financial year of 2021, 21-22 and 22-23, and they must collaborate with the recognized institutes that is being listed in the Schedule 7. And next, very important thing is you need to do the disclosure in the annual CSR report. It is mandatory, it is required in order to keep the track of the transactions that are being made. Next is CSR reporting and compliance. The CSR activities and expenditures must be disclosed in the annual CSR report. And the MCA, that is the Ministry of Corporate Affairs, monitors the compliance through the National CSR Data Portal. So the CSR framework is now evolved to include a more structured and a more transparent way, ensuring that the companies contribute towards the socio-economic development of the country, thus complying with the statutory obligations. Now coming to after we have understood about CSR, after we have understood which companies is going to contribute towards the CSR, now we'll discuss the constitution of the CSR committee. Now, the constitution of the CSR committee can be discussed in section 135(1). It identifies that every company that is attracted by CSR provisions under the Companies Act 2013 must constitute a CSR committee of the board. That means that the company that is attracted by the provisions of the CSR under the Companies Act 2013 must constitute a committee which is called as the CSR committee of the board. So CSR committee composition had the listed companies. It identifies that minimum of 3 directors has to be present in that particular committee, and 1 director has to be an independent director. Now, this is about the listed company. Now, the committee for the CSR committee for the listed companies have the option that there should be minimum of 3 directors, and at least 1 director should be an independent director. When we are talking about the CSR committee for the unlisted public companies, It again identifies that there should be a minimum of 3 directors and at least one independent director has to be there. Unless the company is not required to have one, in such cases, at least 2 directors has to function. When we are talking about the CSR committee composition for the private companies, minimum of again 2 directors are required and there is no requirement for the independent director. So when we are talking about the CSR committee for the listed companies, it should have minimum of 3 directors and at least one director should be an independent director. When we are talking about the CSR committee for the unlisted public companies, there should be minimum of 3 directors and at least one independent director unless the company is not required to have one. When we're talking about the CSR committee of the private companies, it should minimum have 2 directors and there should not be any independent director. It is not required. Now, when we are talking about the CSR committee for the foreign companies, again it should comprise of at least 2 persons. That means one person must be a resident of India. Please again identify when we are talking about the CSR committee composition for the foreign companies, there should be at least 2 persons and one person must be from India and it should be authorized to accept the services and notices on behalf of the company. The second person is to be nominated by the foreigner. That means one person should be from India and another person should be nominated from the foreign company. Now, who is exempted from the CSR committee formation? Now, if the CSR spending requirement is 50 lakhs or less, constitution of a CSR committee is not mandatory. That means beyond 50 lakhs, if you are investing, CSR committee is required. So a company which is not spending 50 lakhs or which is spending 50 lakhs or less, the constitution of a CSR committee is not mandatory. The board of directors should discharge the functions of the CSR committee in such case. So we don't have to keep another person for assessing the CSR investment or CSR activities. That is, the board of directors is taking the responsibility of it. So the CSR committee ensures a formal structure for planning of activities, execution of CSR activities, and thus reporting of the CSR activities. So when we are talking about flexibility is being provided to the smaller companies. Flexibility is provided to the foreign companies, and flexibility is also being provided to the companies with lower CSR spending. So the company which is having investment of 50 lakhs or less, they are not being forced to have a CSR committee. Now coming to CSR policy. What is CSR policy? Now when I talk about the policy, a policy is basically a statement that outlines the company's approach and the direction for CSR activities. That is, it is a statement that outlines the company's approach and the direction for CSR activities, considering the recommendations from the CSR committee, and it includes selection, implementation, and monitoring principles. It also includes formulation of the annual action plan for CSR. The different important components of the CSR policy. The first one is the approach and direction. When we are talking about who is going to approach whom and who is going to direct, it is being provided by the board of directors who are based on the recommendations of the CSR committee. So please keep it in your mind. When we are talking about a CSR policy, there are different important components. The first and very important component is the approach and direction. The approach and direction is being provided by the board of directors on the recommendations of the CSR committees. Now, what is the guiding principle? It is governing the selection. The guiding principle of this particular element is governing the selection, implementation, and monitoring of the CSR activities. Annual action plan, it specifies the CSR activities to be undertaken, which is aligning with the Schedule 7 of the Act. There are different important considerations that are being taken for the CSR policy. It suggests that CSR activities must be different from the normal business operations, because when we are undertaking the normal business operations, it will be difficult for us to give time, that is the extra time, it is the extra hours to the CSR. So CSR activities must be different from the normal business operation. That means in order to undertake the CSR activities, we have to find some time apart from our businesses to undertake these activities. So it should be aligned with the socio-economic and environmental objectives, which is aligned with the Schedule 7, as we have already discussed. So the CSR policy must be publicly available on the company's website, thus ensuring transparency of the activity. Now comes what is the role of the board in the CSR policy. Now, see, the board of directors play a very important role in ensuring that there is a proper formulation of the CSR policy in the organization. Because if the things are not proper, that then what will happen? It will create chaos in the organization. So there should be a proper formulation of the CSR policy. The policy need to be implemented as per the recommendations of the committee. Now this committee is very important. Whatever decisions, whatever suggestions are to be made, these are to be made by the committee, that is by the board, and this committee helps the board in taking the decision. So the policy is published again in the company's website, and the transparency is being maintained, because if transparency is maintained, then the things become clear and you understand that things are done in a proper manner. The CSR policy is crucial in driving structured and transparent CSR initiatives. So it ensures that the company's CSR activities is contributing meaningfully to the community and environment in compliance with the legal requirements. Now comes the concept that how much are we spending? What is the amount we are spending for the CSR activities? And if the amount is not being spent in the CSR activities, where are we transferring this unspent amount? Because we have already discussed that whenever we are undertaking any of the activity that is relating to CSR, it has to be open, it has to be transparent, it has to be well communicated. So every company that is being covered by CSR provisions is required to spend at least 2% of its average net profit of the preceding 3 financial years on CSR activities. So if a company has not been incorporated, if a company has been incorporated for less than 3 years, the average net profit of the CSR is computed for the available financial years. So calculation of this particular amount is very, very important. Then only it will help you in understanding, shall we go for the CSR funding or shall we do not go for the CSR. So when we are talking about the net profit for the CSR purpose, it is being calculated as per section 198 of the Companies Act. It excludes capital payments and receipts. It excludes income tax. It excludes set of past losses. Now when we are talking about this profit before tax, it is used to compute the non-profit under section 135 of the Act. So this is how the funds are being transferred. The CSR fund is being spent. Suppose we are using the amount but we cannot spend it. Then what will happen? it has to be transferred. So it is suggesting that if a company is failing to spend the required CSR amount, then it must specify the reasons why it could not be spent in front of the board, in front of the committee. So the transfer, one need to transfer the unspent amount to the fund specified in Schedule 7. So if you are using money for a particular CSR activity and it could not be used, then this particular amount which is not used can be, diverted, or can be either distributed among other, among other areas of Schedule 7. When we are talking about Schedule 7, we have already said you about the 11 practices that one has to follow in CS. So the transfer of the unspent amount to a fund that is being specified in Schedule 7 within 6 months of the financial year end, if not relating to the ongoing project. So you have to transfer. There are specified funds for transferring the unspent CSR amount. There are different important funds. The first important fund where we can transfer this amount is the Prime Minister's National Relief Fund. So we have already discussed that when we are having this fund for CSR, we have to invest it. We have to invest it for a cause. If when we are going for investment, there are certain amount that is being left out, then this left out amount can be again, sent to the different important agencies, or different types of funds are also available. For example, we have the Prime Minister's National Relief Fund. We also have the funds that is initiated by the central government for the socio-economic development and welfare of SCs, STs, that is scheduled castes, scheduled tribes, minorities, backward classes, women section, etc. Next is we can first we discuss we can contribute to the we can contribute to a specified funds. The first important specified fund where we can contribute this amount or this unspent amount is the Prime Minister's National Relief Fund. Second is the fund that is being initiated by the central government. Third one is the contribution to government agencies. The CSR contributions can also be made to the incubators of the research projects that is being funded by public funded universities. For example, there are different important bodies which are being included under it. The national laboratories and the autonomous bodies which are included under these are ICAR, that is the Indian Council of Agricultural Research. Second is CSIR, Council of Scientific and Industrial Research. Third is Department of Atomic Energy. Fourth is the IITs. Fifth one is the Indian Council of Medical Research, that is ICMR. So the contributions to the government bodies involve different important scientific research. So that these contributions can be done towards the government bodies. So they can make the CSR contributions to the government bodies which is involving in scientific research. For example, these bodies are DRDO, that is the Defense Research and Development Organization. Second is DST, which is especially for the project that is aimed at advancing the SDGs, that is the Sustainable Development Goals. We have 17 Sustainable Development Goals. And then this unspent amount can also be spent on the ongoing projects. For example, for instance, if the CSR spending relates to an ongoing project, the company must transfer the unspent amount to an exclusive bank account named the unspent CSR account within 30 days after the financial year ends. If you're not spending within that, then it will not be acceptable. The funds in this case must be used within 3 financial years for the CSR obligations. The funds should remain unutilized at the end of the 3rd financial year, and they must be transferred to a specified fund as mentioned earlier within the 30 days after the 3rd financial year is ending. Now, what are these ongoing projects? How are we going to define these ongoing projects? It is basically a multi-year project. Ongoing project is a multi-year. In a particular year, you can go for manufacturing it anytime with a completion window of 3 years, excluding the financial year it commenced. So a multi-year project with a completion window of 3 years is eligible, excluding the financial year it commenced. Next is the projects originally not multi-year but later extended by the board based on the reasonable justification. Now, when we are talking about this unspent amount, it's okay. We understood where to invest this unspent amount. Now, what about the excess CSR spending? A positive amendment from 2021 allows the company to set up the excess CSR spending against the future CSR obligations. So it can be done on several succeeding financial years as it is being described in the law. Now, how are we going to implement and monitor the CSR activities? Because we have to monitor. When we are going for the implementation of CSR activities, the companies can implement it directly by themselves. The companies, they can immediately go for implementing with the Ministry of Corporate Affairs, that is the MCA, as on from April 1st 2021. So, who are the enable implementing agencies? These entities, the entities which are eligible to become implementing agencies, are basically included, are the companies that are being included under Section 8 of the Companies Act. It suggests that the registered societies or the public trust under Section 12A and 80G of the Income Tax Act 1961, established by the company itself or in collaboration with some. So it also includes the entities that are being set up by the central government or the state government. So, and it is also suggesting that the entities with at least 3 years of CSR experience in the similar activities should be taken into consideration. Now, there are different important process wherein we can go for the CSR registration for implementing agencies. So, to undertake the CSR, different important entities must be filled up. The first one is the register with the central government by filling the form CSR1 electronically. The form should be digitally verified by a CA, by a CS, or by a chartered accountant, or by a cost accountant. So, on the submission of a unique CSR registration number is generated automatically. Now, how this impact of CSR amendment take place? Now, prior to the prior projects to April 1, 2021 are unaffected by new requirements. And the new projects from April 1, 2021, they must comply with the revised regulations. They show with the revised regular. So next is how we can go for engaging these international organizations. The companies may engage in international organizations for monitoring, for designing and evaluating the CSR programs, going for capacity building for CSR personnel. These organizations must be notified under the United Nations Privileges and Immunities Act 1947, and administrative overheads are capped at 5% of the CSR expenditure. So, when we are talking about these international organizations, the companies can use these international organizations for monitoring, designing, and evaluating, for capacity building, and these organizations must be notified under the United Nations Act 1947, and the administrative overheads are capped at 5% of the total CSR expenditure. When we are collaborating with the other companies, the companies can collaborate with others for joint CSR initiatives, which is provided separate reporting by each company's CSR committee is ensured, and compliance with the CSR reporting rules is maintained. So when we are monitoring the CSR activities, who is going to monitor? The board of the directors. Okay, they must ensure that the CSR funds are utilized for the approved purpose. The chief financial officer or a responsible person must certify the fund utilization. For ongoing projects, the board of directors monitors the project timeliness, fund allocation, and makes necessary adjustments for timely completion of the project. Now we'll discuss what are the different important duties and responsibilities of the CSR committee, and we have already discussed that CSR committee is very very important, wherein we have the three members, two members are one particular board member is independent and rest two are from the company. So when we are talking about the responsibilities of the CSR committee, the first and very important thing that we'll be discussing is the formulation and the recommendation. So the CSR committee formulates and recommends a CSR policy to the board, and the CSR policy again outlines the programs and projects that is being aligned with the Schedule 7 of the Act. When we are talking about the expenditure recommendations, it recommends the expenditure for CSR activities. When we are talking about the implementation modalities, it defines the implementation schedules and fund utilization for projects. When we are talking about monitoring and reporting, it monitors the implementation. The committee monitors the implementation of the CSR activities with a transparent control, so that everyone knows that how this funding is being done, and with a transparent control and reporting mechanism. And it also helps in assessing the impact and the needs for CSR projects. Now comes the concept that now comes the element that what is the responsibility of the board of director? The responsibility of the board of the director is to approve the CSR policy after considering the CSR committee's recommendations. So it comprises of what? Now, oversight of the CSR Act. That means it ensures that the activities in CSR policy are executed properly. Mandatory spending, it mandates a minimum spending of 2% of the average net profit from the last 3 financial years, and for the companies with less 3 financial years, it calculates the average net profit accordingly. What is annual? When we go for annual reporting, the board report must include the composition of the CSR committee, the contents of the CSR policy, the regimes for spending less than 2%, and the details of the amount which is unspent has to be there. Transfer details of any unspent amount that is related to the ongoing projects to the specified funds, and it should be done within the 6 months of the post financial year. When we are talking about the foreign companies reporting, for foreign companies, the balance sheet has to be maintained, and it must include an annexure that is detailing the CSR report. When we are talking about the penalties for non-compliance, we are talking about the company penalties. So non-compliance results in a penalty of twice the unspent amount or rupees 1 crore, whichever is less. With the officer in default penalties, so every officer in default who is default faces a penalty of 1/10 of the amount unspent or 2 lakh, whichever is less. So you have to be very cautious when you are using this fund or you are utilizing this fund. There are different important other salient features of CSR after the latest amendment. That is creation or acquisition of the capital asset. The eligibility is the capital asset may be held by companies established under the Section 8, registered public trust or registered societies. The beneficiaries like the SSGs or the collectives, the public authorities that is being defined by the RTI Act of 2005. When we are talking about the compliance requirement, it is suggesting that assets that is created prior to the amendment must comply within the 180 days, extendable by 90 days with the board approval. Then we discuss about the impact assessment that is mandatory for certain companies. So the companies who are having an average CSR obligation of 10 crore or more, the projects with a minimum outlay of rupees 1 crore completed at least prior to 1 year. Second is the independent agency required, wherein we want need to conduct the impact assessment, and the report need to be submitted to the board, and it should be included in the annual CSR report. We should take into consideration the cost which identifies expenditure which we are doing on the impact assessment is separate from the 5% administrative overhead, which is capped at 5% of the total CSR expenditure, or rupees 50 lakhs, whichever is lower. There are different important key amendments in CSR rules. The first one is the administrative overhead, which defines as the expenses that are being incurred for the general management of CSR functions, excluding the direct project cost. Net profit exclusion, it excludes the profit from the overseas branches and the dividends from the companies that is complying with the section 135. CSR expenditure guideline, that is the surplus that we are getting from the CSR activities, must be reinvested or transferred within 6 months. Now, this excess spending can be set off against the future obligations under specific conditions. What are the conditions? Reporting and compliance. Form number CSR 2 requirement, wherein the companies must submit a CSR report, that is the form CSR 2, as an addendum to AOC 4. Now, when we're talking about this National CSR Exchange portal, it's a portal for disseminating the CSR related data by the Ministry of Corporate Affairs. There are other important clarifications that CSR as a board review process, wherein the companies must formulate and implement these CSR policies, and the government has the no direct role to play. There should be focus on Schedule 7, that is the activities which are included under Schedule 7. The expenditures are to be made on such activities. Activities that is being benefiting to the employees has to be there. It suggests that any activity that is solely at the employees is excluded from the CSR, and incidental benefits to the employees are permissible. So when we are talking about this collaboration and impact assessment sharing, the companies can collaborate with the CSR projects and share their impact assessment results. So the cost of this shared assessment can be distributed among the collaborating companies. Now we'll discuss how this CSR and corporate governance goes with ESG. So we'll first discuss about how the introduction of CSR and corporate governance. Both CSR and corporate governance are a voluntary ethical started as the voluntary ethical practices, and initially CSR was seen as philanthropy, corporate governance was seen as the ethical conduct. Subsequently, what happened? Now, corporate governance became mandatory with clause 49 by SEBI, and CSR became compulsory with the section 135 of the Companies Act 2013. Now comes the role of the stakeholder. Now, what are the expectations of the stakeholders? Increasing importance is being placed on corporate governance and CSR by the public and the stakeholders. The companies are evaluated based on the governance structure and the societal commitments. The rise of ESG. ESG is environmental, social, and governance has become a significant focus now on the corporate world, and investors are increasingly using environmental, social, and governance criteria to assess the company performance. There are differences in focus where CSR in India is primarily a statutory requirement. ESG is more voluntary commitment and investor expectations. Now, when we are talking about alignment of CSR in ESG, there are different important benefits wherein the companies which are aligning CSR activities with ESG commitments, it is boosting the corporate reputation and investor confidence. Now, there is a statutory mandate wherein Section 134M of the Companies Act 2013 mandates the reporting on energy conservation on ESG disclosure. And SEBI also requires specific ESG disclosures for the listed entities. Now it is how it will it in general it would impact the corporate success. How? Now it give rise to strategic advantage when the companies are aligning their CSR with ESG. It is enhancing their stature and the brand, and there is increased attractiveness to the global investors who are focusing on sustainability. It also gives rise to long-term benefits wherein there is an enhanced brand image, turnover is enhanced brand image, high turnover, and profits are there through responsible practices. So successful alignment of this contributes to social and environmental objectives. So when we are collaborating this, there is a mutual reinforcement wherein CSR and ESG practices reinforce each other, adding value to the enterprise. Companies committed to the ethical principles and sustainability can thrive both socially and financially to the company. Now comes CSR audit. CSR audit is nothing but monitoring and reporting of the CSR activities. When we are talking about this, we have to discuss about the overview of CSR rules. So CSR activities must be monitored and it has to be reported as per the regulatory requirement. That means it has to be transparent. So there should be emphasis on transparency and accountability of the CSR implementation part. So what are required? First is the impact assessment has to be done, where corporates with large CSR outlets are required to conduct impact assessment. Assessment must be carried out by an independent agencies who are not in this group. Reporting, the impact assessment report must be reviewed by whom? Reviewed by the board of directors, and it should be annexed to the annual CSR report. There are different important technical guidance by ICI, where the role of Institute of Corporate Accountants, it issued a technical guide as a handbook for the CSR implementation. It covers the requirement for the CSR audit and report. According to CARO 2020 relevance, there is technical guidance which includes the aspects that are related to the company's auditor report order 2020 CARO 20. It focuses on what? It focuses on compliance, it focuses on auditing standards and the effective CSR report. The different important key components of CSR monitoring and reporting include the monitoring mechanism, that is establishing a transparent controlling system for the CSR activities and regularly updating and evaluating on the ongoing projects. Now, how this framework works? Now, the annual report is to be produced, which should include composition of the CSR committee, CSR policy details, expenditure breakdown, how this expenditure is being done, the breakdown of it, and the impact assessment findings. So in general, it is telling that when we are going for this CSR audit, we are basically, finding out if the amount that is being invested is being done in a transparent way or not. So there is importance of compliance, that is adherence to the CSR rules, enhancing corporate accountability and stakeholder trust, and there is impact assessment and rigorous reporting which is contributing to effective CSR practices. In the future, there is continuous improvement in CSR strategies. There is continuous improvement in CSR strategies, which is based on assessment outcomes. There is also alignment with the evolving regulations and the stakeholders' expectations. There is in this also we discussed about monitoring and reporting of the CSR activities, wherein we went for overview of the rules, CSR rules. It identifies that the CSR activities must be monitored and it has to be reported as per the regulatory requirements. That is, it emphasizes on transparency and accountability in CSR implementation. So in general, it is telling that whenever we are talking about rules, laws, regulations, frameworks, All of these is basically finding out that how much you are transparent and how much you are accountable of the responsibility that you have taken to incorporate CSR activities and make your business going. So with this, we have completed this chapter, and it also has identified that when we are going for this impact assessment, the corporates with larger CSR outlays need to go for this impact assessment, and it should be carried out by an independent agencies. There are different important technical guidance which is also put forwarded by ICAI, and we need to follow it judiciously. So there are different important monitoring mechanisms also. We have already discussed that there should be transparency and regular updates has to be done. When we are talking about the reporting from our annual reports has to be produced. We should find, we should provide you the details of the composition of the CSR committee, the CSR policy details, the expenditure breakdown, impact assessment findings, so on and so forth. So this is in general going to impact not only the CSR activity, but it is also checking how the company is contributing towards the benefit of the society. So thank you. In the next session, we will complete with another chapter.